With me now is Capital Network's Lionel Therond. Lionel, good afternoon. Nice to see you.
Good afternoon, Andrew.
And don't forget, for Lionel's full report, click on the eye in the top right-hand corner of your screen. Lionel, we're talking Chariot Oil and Gas. To kick us off with, give us a bit of an introduction here, some of the background, please.
Yes, so Chariot is a UK-based oil and gas exploration company. It's listed on AIM in London. The current share price is just above 15p, and at that price, market capitalization is about $55 million. Chariot was IPO'd in 2008. At the time, it had a purely Namibia-focused portfolio. Since then, they drilled two unsuccessful wells in offshore Namibia, but they have kept a presence there. They have integrated the lessons and positives, some positives from those wells, in order to identify other drilling targets. They have also widened the portfolio, taking early entrance positions in Morocco and Brazil, which, like Namibia, are Atlantic margin opportunities, which are validated by proven discoveries in conjugate provinces across the ocean. We see Chariot as having a portfolio of a large cap with the upside of a small cap, obviously in the success case. And so we believe that it could be an opportune time for investors to revisit the equity story.
Could be an opportune time, you say. Well, run us through what their near-term development plans are for these assets.
So Chariot, first of all, is in pretty good position, I think. They have cut costs to weather the commodity downturn, and their G&A is only $5 million per annum. Their cash position is $22 million. Or rather that, which, no debt, and that significantly exceeds their commitments. And also, from the purely operational point of view, they're in a position to drill 3 company-making wells in Morocco and Namibia in the next 18 to 24 months. The first well in Morocco is a well called RD1, which is fully funded by Eni. And that is scheduled to spud in late Q1 next year. The prospective resources there for the target is 770 million barrels, so quite large, and Chariot has 10% interest in that. And also, importantly, success in that well would de-risk an additional 1.2 billion barrels at current equity level. The second well is called Kenitra. It's also in Morocco, and it's a prospect with resources of about 350 million barrels. And in that one, Chariot has 75% interest, so quite large. That well is subject to funding, and that's scheduled to spud in early 2019, provided they can secure funding. In Namibia, Chariot have identified 3 prospects with prospective resources of several hundred million barrels, of which they have 65% interest. So those are the immediate plans. In Brazil, the next step is to define a prospect, a drill-ready prospect from the 3D seismic, which are in process of interpreting. Having said that, management believes there is potential for material accumulations there, comparable to those found in Ghana, which is on the other side, and very similar province to that basin in Brazil. Any exploration drilling would need, Chariot would need to find a partner. And also there is a well which is in a nearby acreage, which is going to be drilled certainly before Chariot drills anything. So that could be a well to follow in the next few months.
So plenty happening. You mentioned the share price right at the start there. What's your view on where it's sitting at the moment? Room for some upward movement, you reckon?
Obviously, the share price has recovered strongly since the lows at the bottom of the oil price downturn. And it's also up about 90% in the last year. So I think that's reflecting the good work that management has done to exit the crisis in such a strong position. As I mentioned, the mid-market cap is about $55 million. They have $22 million in the bank, so an enterprise value of about $33 million, which I think leaves some room for a strong potential upside in success in any of those wells.
That's great, Lionel. Thank you. For Lionel's full report, click on the eye in the top right-hand corner of your screen.